This is the most important week of the quarter for markets. No, I am not being hyperbolic. I mean that literally. We have 37% of the market reporting earnings this week, including big tech players like Microsoft, Meta, and Amazon. FOMC is happening on Wednesday, and this will be the last interest rate decision until mid-September. And the White House is going to make a crypto announcement on Wednesday related to the strategic Bitcoin reserve. Oh, I almost forgot that Friday is also the August 1st tariff deadline. Everything is stacked. If there was ever a day that could really whipsaw markets, this Wednesday would be that day. We have so much to discuss, so let's get right into the charts. For stocks, commodities, and crypto, let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a good weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the channel, helps the content get out there to more people, and it means a lot to me personally. So, summers are typically slower in markets, but so far, that has not been the case. In classic 2025 fashion, we have another huge week, and if there was ever a week that could really determine the trajectory of the market for the next, I would say, even month and a half, this would be it. Personally, I'll really closely be watching Hood, Coin, and PLTR earnings. These have been among the top stocks, let's call them the darlings of retail investors. And based on the reaction we see to those earnings, that will really be a good bellwether of what we can expect through August and early September. If those assets sell off, it could be an early warning sign for the broader market to experience some weakness, which we need to keep an eye open for as we get into these kinds of dull markets. And what I mean by dull market is a market that's just slowly grinding upward, making subtle higher highs and higher lows. The other names we want to watch this week would be SoFi and PayPal on Tuesday, perhaps UNH2 if you're looking to bottom fish. I don't know what the reaction will be there after their recent government lawsuit. ARM on Wednesday, MSTR and Apple on Thursday. Today's going to be a bit of an abridged video since we're really waiting for those key events this week, so we have something to react to. In markets like this, we want to react rather than try to predict what is going to happen. And in these kinds of weeks, these are also the periods where I personally slow my trading a bit, since so much of our edge is taken away when we're beholden to these external factors. However, I will be posting plenty of updates as things develop on my X, so if you don't already, give me a follow there. The link is in the description down below. Let's get right into the charts. All right, starting on the S&P 500, where we have a visual representation of a dull market just slowly grinding higher, we did have a little bit of a gap up open. The market liked the EU trade deal news that came out on Sunday afternoon. Then we sold off and closed very much in line with our closing price on Friday at 6,390. If we go over to the NASDAQ is also grinding higher, but closed a bit higher than the S&P 500. So we are starting to see some subtle signs of strength come into tech, and we will have to see how that carries out throughout this week as we get all those major tech earnings rolling in. With that rotation into tech, we did see a sell-off on gold, noting that more risk-on mindset today. We have broken this underside uptrending support line. Today, for Tuesday in the overnight hours, we are slightly positive on gold, but I'm going to keep my eyes on this one because if gold keeps rejecting, that is going to be good for risk assets. Looking quickly to SMH, we did have a very positive day today for the semiconductors, getting back up close to our all-time high range for SMH, and that strength was obviously noted in the NASDAQ as we saw that strength in semiconductors carry through. Moving on to Bitcoin, which is still consolidating, but just starting here on the weekly, we did ever so slightly have our highest ever weekly candle close at 119,400. So that was a good sign of strength, at least on the weekly chart. We've since chopped around and pulled back a fair bit today on Monday, but this weekly candle by itself sets us up to potentially test those higher prices sooner than later. So I like what I'm seeing on the weekly. The daily is a little bit of a different story and still has some proving to do. What I mean by that, it still has proving to do on the daily, is if we first start here on the 4-hour just to see the trend line. From the bottom here of our previous correction on the 22nd of June, we had this underside support that played support, and then we broke down from that, and then we rallied back up into it. We actually did close yesterday's daily candle just above this line, and then today's daily candle closed back below, which you can see here. So reclaiming this trend line would be a great sign of strength. And then also I'm looking to these previous swing tops here, the nearest being that 120,350. If we can get a swing top to pass that, set a higher low, that would put us on our way to an uptrend, which just from where we are right now would look something like this kind of structure. So let's see what Bitcoin can do this week, but that weekly candle close is giving me some confidence that we should see higher prices sooner than later, unless something crazy happens this week, which is possible. Looking to Solana, which has also been in an uptrend since the 22nd of June, Solana has not broken its major underside support, but as we accelerated away at this increased clip of a rally, we did break down from that minor underside support just a few days ago. So we did find support here at the $176 level, which coincides to the most traded range in our previous all-time high peaks from this recovery since April 7th. So we did find support there, which is a good sign. And we have our major trend line underneath. There is still weakness in the charts in terms of structure. We've now made this higher low, I suppose, compared to these, lower high. Now, hopefully, we can set a higher low and a higher high, or perhaps we're going to chop around sideways for a bit and find support eventually at this trend line and move away. That would be the best sign of strength to me. If we do break down from this trend line, put this on your charts and watch it, that would be an early indicator that we will have more downside price action ahead and that our daily chart needs to reset some more. Right now, we've almost completely reset the RSI on the 4-hour. If we look to mean reversion, it has printed a buy signal on the 4-hour. We're about to get a second one. But if we look at the daily time frame, in contrast, the daily time frame is still quite overheated on mean reversion, and the RSI is working its way back to the middle of the range. MSTR had another fairly weak day today, which mirrored the weakness in Bitcoin. For this, all I can really say, we're still into support here at these previous peaks, right at $403, so just above 400. But we really just need to see what Bitcoin is going to do and if we have a reaction to earnings on Thursday. And for this to continue in this uptrend in the near term, I would want to see us get back above this trend line, above the $420 level, with some consecutive daily candle closes sooner than later. Broadly speaking, we are still in a decent structure in terms of setting that higher low, higher high, presumably higher low. And if we can recover from this and continue to move away, that would be a great sign. But we've just been flirting with the support here at the center confluence cloud and these previous peaks for about 4 days now. And if we continue to test that too long, I fear we might see a breakdown. So keep your eyes on Bitcoin this week to see what MicroStrategy is going to do, and keep your eye on earnings and what the reaction to that call is going to be like on Thursday. Looking to Tesla, we are still squarely in the middle of this wedge pattern, and I've got my price projection ready to measure this out whenever we break either to the upside or the downside. Right now, this bounce the last 3 days looks to be quite good. We did close and now find support on the back test of this $325 level, which you can see has cut through all of this trading range. So that's a good sign. And now I want to see us pass these previous highs right here on this swing to test the top of this range to see if we can hopefully break out of this wedge that we have been in since May. So quite some time consolidating and tightening up in this wedge pattern for Tesla. Before their earnings, I do want to bring up Hood and Coin. Hood did break into the center confluence cloud a little bit and has since recovered this and rallied a little bit as we get close to their earnings call. But both these charts are definitely a bit overheated. On the 4-hour time frame, we have reset our RSI a fair bit. And if we look to the daily for Hood, that daily RSI is still quite elevated. And we do have, you could call this, I suppose, a bit of a hidden bearish divergence where the RSI is finding similar highs, but the price is grinding higher. But it still seems like this could maybe still run a little bit, but it's not sustainable at this clip in the long term. If we look at Coin, in contrast, the interesting thing with Coin is they had the most bullish news last week of adding crypto perp trading, which is a huge moneymaker. And in any other market, without all these other crypto news going on, this would have been the biggest story for crypto in the US. And it was barely a blip on the radar. And we've been selling off since that announcement. So take note of this. When good news happen and a stock starts selling off, that is a big sign to you right there. And this to me is not setting up well for earnings right now. Perhaps if they really beat to the upside, we have a surprise bounce. But to me right now, with the trend about to flip and this daily candle that we just closed, it's looking like this may need to correct for a bit. Coin and Hood both still have some room to run this fall, but they definitely need to cool off, and a little bit of consolidation or some correction is normal. And just note that Coin is looking a bit weaker going into earnings than Hood is. If we look at Deckers, we had that island reversal last week, and today the stock really gave back a lot of those gains, moving from 126 after earnings on at the end of last week, all the way to a low of 111 today. So if you are looking to get into this, we are getting into good levels where at these previous peaks right here in the correction, I actually hope we don't close the gap on this gap up on the island reversal. That would not be as strong of a sign to me, but these island reversals are generally quite bullish. That close of that gap is 109.59. And just for contrast, to give you a comparison of a stock that had one of these, Tesla had this before its big run up. So we'll look at that in a second. But the last thing I want to note is that the confluence model bands on the daily are squeezing. And it's very rare that you get a tight squeeze like this on the daily time frame. So this is telling you that a volatile move is coming. Probably not for a few weeks, because we need to tighten up in this range before breaking out. I'm just assuming this is going to break out to the upside after this big correction, but no one can see the future. But let's look at Tesla briefly in contrast. Here we are back on the Tesla chart on the daily, and this was in October of last year, where we had a really darn similar setup. We had this gap down, and then we had consolidation for a couple of weeks, and then on earnings we had this gap up open. So this is your island reversal here, and then Tesla shot up, corrected a little bit. I suppose you could argue Deckers shot up and is correcting a little bit right now. So little different story, but similar pattern, and then really began to rocket up into the end of the year. I'm not saying this exact price action is going to repeat for Deckers, but you can just see how an island reversal, if you spot it on the charts, is generally a very bullish reversal signal. So we covered SMLR on Friday and adding to that position, and SMCI is another one that I've been holding for a while, but don't talk about all the time because it's just been slowly grinding up. And we had a nice gap up open today and some really bullish price action. What I'm looking to SMCI to do is to pass this previous peak right here at 66.50, and then I'm targeting actually our fib extension and our 100% extension from the previous move, which are essentially the same thing, land right here at $77. So that's my near-term target for this. Beyond that, we just have to look at what the charts are doing, because we are getting a bit overextended here on the daily. So that would mean as we move up, we pass these previous peaks. That's what we need to show us that there's strength in the charts. And beyond that, we really just need to assess what's going on to see if we can reset a little bit and then try to tackle this 1618 extension, which would be at $107. But right now, things are looking good for the SMCI chart, and the all-time high is at $123. So we still have quite a ways to go on SMCI to reclaim that. Just touching on OKLO briefly, because I mentioned on Friday that I'm going to take some profits at $78, which we hit in pre-market. Maybe if I go over to the 4-hour chart, we can see that right there, 78.53. So I had a limit sell order that filled for 50% of my remaining position. And now I have taken a good amount of profits on OKLO between this first profit zone at 74 to 75 and this. And I would just say this stock has been very volatile, And this is why it's nice to have targets and set limit orders, because I wouldn't have caught this otherwise. And afterwards, we had a massive sell-off from 78 all the way back down to 72. Then we bounced and found some equilibrium. But this seems to just be tightening up a little bit right now for the near term. If we look to the daily, I would suggest that it does still feel like, based on the RSI and where we came from here on these peaks, that we could run a little bit, or this could be the early signs of a bearish divergence, which we need to be on the lookout for, where we're forming higher highs in the price action, but the RSI is forming lower highs. And actually, I guess you could argue that we just broke above that trend line right there. Sorry, let me make that a little bit more clear. You could say we just broke above that. So maybe we're invalidating this bearish divergence on the RSI, and that was simply what played out here. You could say that this was the correction that played out from the bearish divergence right here. And now if we make higher highs on the daily RSI, this would not even be something I'm looking at. And since this broke through the trend line, let's see what that does over the next couple days if we can stay above that. ASML, there's not much to report here, but since the buy on Friday, we did have a very nice bounce and gap up open. This sold off a little bit throughout the day like the rest of the market did, but this is a good sign to get back above the 200-day moving average, and we are seeming to find some support from this zone. I would really say that the support on this chart is a bit of a zone between these peaks here and these lower peaks right here. I would draw that out, roughly, let's say like that, to be a bit generous with the support range. And actually that corresponds to the bottom of the Confluence model cloud. So at the very bottom end, 676, at the top end, 710. A fairly big range, but percentage-wise for this stock, that is not that much. That is 4%, 5% range. DFDV, everybody on X has been asking about it, so we have to talk about it. It is still selling off after we have had this breakdown from this wedge pattern, and we are almost reset on the mean reversion on the daily RSI. Our daily RSI has not bottomed, but assuming we're still in a bullish run up, maybe we don't get the daily RSI bottom, then we would need an extreme sell-off for that to happen. If we do look on the 4-hour, is also close to printing a mean reversion dot. We are very close to oversold on the 4-hour RSI, but because of this breakdown, I'm still targeting this 100% extension to the downside, which would be at 1450, let's say, for round numbers. And that would be a zone where I would be looking to a bounce. And if we can confirm that bounce, I wouldn't necessarily be putting a limit order on this right now because it has been a bit weak. This is almost one where I want it to prove to me that it is recovering, to see that bounce and to see the trend turn before getting back in, to have that confirmation rather than trying to catch the falling knife. All right, one more Treasury play we have to cover, which is BMNR. And I got in a little bit last week, around $40. We had this support, which unfortunately broke down today and then sold off after hours on the announcement of their pipe unlock. Here is the full disclosure if you want to read that. And basically, this opens up selling to a lot of the original shareholders. And since this has run up to ungodly numbers, I think it went up 800%. All the way up to 160 and has come back down to earth. Some of those players that are now able to sell have done so. In terms of the fair value of this stock, at $23 equates roughly to the value of their Ethereum holdings. So mark that on your charts. And actually, I put in a little limit order because I'm assuming this bull market still has more to run. And $23 would put us, about right there. So from where we are right now, that is still another 20% to the downside. So if you can get in there, that seems like a fairly good value. Moving on to the first of the requests, and we only have 2 of them today. First would be SoFi, which actually I've been scouting for a bit of a blow-off top move. There's a massive cup and handle pattern on this one that I can't even get it on the chart. It's so massive. That's targeting about $30. So I just got in with a few call options a couple of weeks ago to see if we would hit that price target. But right now, the daily RSI is very much overheated. These are not the kinds of things you want to chase. And I hope I was clear at the time that what I was doing was risky. It does seem like it's cooling off a little bit right now. We have earnings coming up, so we need to see what the reaction is to that to see if we can get another bounce. And if we can't get that bounce soon on earnings, it feels like it may still hit this price target this fall, but it seems like it might consolidate and correct for just a little bit before taking that next move up. So a little bit uncertain on SoFi right now, but watch earnings and see how it reacts to that this week to give you an idea of what might be in store for the next few weeks ahead. All right, someone else asked for an update on Circle, and there's not too much I can say yet. We do have earnings coming up on the 12th of August, but we are still finding support here at this 50% level at $181, which, if you want to reload, could be an interesting zone to look at, but you could also say that we've had this little underside support or uptrend. Let's go to the 4 hour so we can sharpen that up. I always like to tighten these up on the 4 hour rather than the daily. See how that helps us get that nice trend line. We had 1, 2, 3, 4, 5. Breakdown, a little back test for resistance. So not a super great sign here on the 4 hour just in terms of breaking that trend line. But let's see if we can get support at the 50%. If we do break down from the 50% and then break this previous low right here at 171, that would be a sign of concern that we've got a little bit more correction to go on this one. This bounce back up was looking strong. Now this is looking a little bit weak, and we just honestly need to give this a little bit more time. If you're not in a position, I'm holding still from the IPO, but if you're not in a position, I would take a little bit of a wait and see approach and let this prove something to me, even if that means getting in at higher prices. Getting a bounce and a confirmation of a trend flip is always a safer play, and the price you pay for that confirmation is obviously those higher prices, but you're not taking a guess and trying to, again, catch the falling knife. I hate that term for this because it's not really a falling knife, but this just might have more to correct before it finds its base. That's it for the charts. All I can say is keep your head out the window this week and perhaps consider having some dry powder ready over the next few weeks in case we get a great opportunity for entries before the fall. I look forward to seeing you guys all on Friday for the weekly wrap-up, and in the interim, interacting on X. Bye for now.